You don't make money in trading by expecting. You make money in trading by reacting and showing up and doing what has been working for you consistently, repeatedly. You make money in trading by sticking to what has worked for you guys and doing this on a rinse and repeat mode. That's it. Do you believe that I was actually profitable from day one? I hope you don't, because I wasn't. It took me over 5 years to overcome all of the obstacles, all of the ups and downs of trading. And I can tell you that if somebody is trying to guarantee you profits from day one, they're probably thinking something behind your back. So you better be careful there. But let's put things in context, guys. The purpose of this video today is to show you that if you have a system and you're sticking to your system consistently, results will show up no matter what. I'm a strong believer that hard work always pays back. So just bear with me and I'm going to walk you through today's trading session and why it was so unexpectedly beautiful and why I was able to get not in one, but two potentially double-digit returning trades. So let's have a look, guys. Alrighty, guys. So this is the second trade of the day. This trade is currently around 1 to 9 risk-to-reward ratio. I'm actually going to let this trade run for a little while longer, and until this happens, don't forget this is the 1 minute chart, guys. So if we switch to 1 hour charts, you can see that right here, and we're just under a minor supply zone. Then what I'll be looking for potentially is the price reaching this next major zone, which can give us an additional maybe 13, 14 axis. But let's see, I would still stick with this trade until I've got a little bit more data to decide if I'm going to take profits or not, or let it run. I wanted to walk you through the other trade, which we've already closed, and this was a double-digit returning trade, and this was a Nasdaq trade. So let's jump into the trading room. This is where we took profits on our Nasdaq trade, and as you can see from the screenshot, we are staying at 1 to 11 risk to reward ratio on this trade. So what is the common thing between those two trades? Alrighty, so apart from being two double-digit returning trades, or one double-digit returning trade and one that is very close to being a double-digit returning trade, I strongly believe that's one of the uniting factors of those two trades is the time I open the trade. So as the majority of you that have been through a trading room or through the day trading program, we are only trading the first 15 minutes of the market open. And this usually used to be the first 30 minutes, but in reality, we are finding the best trading opportunities in the first 15 minutes. Very rarely we stay to trade the other 15 minutes. And both of those trades were taken in these time periods. So this is valid for both the London Open and also the New York Open. And both of those trades that I've just shown you, they were taken during the New York Open. But nevertheless, what matters here is the time frame or the time period that those trades were taken. Look, guys, some of the most explosive moves, high probability trades, happen right after the opening bell in those first 15 minutes because all of the overnight orders, pre-market positions, institutional moves collide, and this creates serious volatility. So when smart trade strikes, liquidity is high, spreads are quite wide, and if you can read price action properly, you can catch moves that sometimes play out in minutes instead of hours. And in our particular case with those trades, those two trades, we actually had the first trade, we pocketed profits in less than 1 hour, so we made 11 x's in less than 1 hour. And this second trade, which I'm currently running, and it's also giving me close to 10 x's, is probably going to be closed tomorrow. But the reason why I'm going to close this trade tomorrow or the day after tomorrow, depending on how it progresses, is the fact that we have a major supply zone, and also the fact that I don't really feel pressurized by closing it now because imagine we already closed one double-digit returning trade. So we have one trade that gave us already 11 x's. And why shall I close this trade when in reality we've picked literally one of the best places to enter in a long trade, and this was right at the bottom of the reversal, and then we have our next major supply zone which is still miles away. So we're currently kind of mid-range next to a micro demand zone. So the price has literally went inside of this zone, and now we have the potential to run for another 12 13 axis to the upside. So why on earth should I close this trade if I'm already making 11 axis on my first trade of the day during this New York session? And this second trade, the worst that can happen if it starts turning around and goes to hit my stop loss, I would end up with a break-even trade. Because don't forget, guys, that I have already covered half of my initial exposure, and I'm currently running a risk-free trade. So for me, the worst case scenario is actually getting a break-even trade on this trade if, let's say, the trade comes down to my stop loss and hits me. So I'm gonna end up with a break-even trade. In the best case scenario, I may just add another 10 12 axis to the current profits of this trade. So why should I close this trade? There is literally no reason why I should close this trade. The only reason could have been if this wasn't a P&L trade and I really needed to book, 10 X's, but this is not my case right now. So I'm just gonna let this trade run and see where it takes us. And one more thing, guys, I mentioned it in my previous video, but I wanted to reiterate again. So I closed one of the trades at 11 axis, and I closed the trade which was the Nasdaq trade, and it literally went through my entry point. And I actually didn't close the second trade, which was a Dow Jones trade. Even though it might look coincidental, one of the major reasons why I didn't is something that I've actually explained in more details in my previous video. So we had the trade which was open, let's say, at this level here. And the exact level, it's less relevant. What matters here is the principle behind and the reason why I actually let this trade run. And then the price actually was positioned in this area for quite some time. Then it retested my entry price, which was this level here, and only then it went up. So as I explained in my previous video, these are some of the best trades, and these are some of the trades that most of the newbies would be killed. And the reason being is because the price is retesting the same level, and in most cases they're very impatient and they're moving the stop losses to break even or slightly above the entry. These are the times when 90% of the traders will be stopped, and these are probably the best trades with the biggest returns. And in this case, I'm still leaving my stop loss where it was initially intact, and I'm just enjoying the ride, guys. So this is very important. Some of the best trades you will experience in your career as a trader are the trades that will actually retest your entries multiple times. Reason being is because this is when the buyers are actually repositioning themselves, and the price has more chance to pick more buyers, build more momentum, and therefore give you more profits over the long term. And if there is one thing to take away from this video, guys, it's gotta be the fact that some of the best trades you're gonna experience as a trader are the trades that you least expect them to turn into your best trades. Remember that, and I'll see you in the next video. Ciao.